From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we're going to look back at 2023 and see how the markets fared, and also take a look at 24. So here to guide us is Chad Roope, a chartered financial analyst, and he's also the head of our investment committee. So Chad, let's start with 2023.
Thanks, Jim. Good to be with you. Yeah, the so-called Santa Claus rally came early in late 23, surprising investors with one of the best monthly returns for both stocks and bonds in years. Our client portfolios benefited and participated in this strong rally. Our call to buy the dip in late October after a 3-month pullback has aged well. We increased our equity exposure at that time with that call and plan to maintain that position for now.
Yeah, and this growth was fueled by the U.S. economic moderation, also global easing of inflation, hinting at an end to the central bank's restrictive monetary policies.
That's exactly right, Jim. The S&P 500 soared nearly double digits with technology and growth stocks shining brightest, followed by a sharp bounce higher and beaten down small cap stocks as well.
So there was a lot of positive news at the end of the year, but also some surprises. The Fed pivoted to a much more dovish position, surprising many investors with anticipated rate cuts in the coming year.
Yeah, exactly, Jim. While the markets and economy have been resilient, they aren't immune to challenges. Any reversal in inflation trends or deepening geopolitical conflicts remain risk to what I'll call our cautiously bullish outlook. For example, labor markets remain tight, but some softening has been visible. With continuing jobless claims reaching 2-year highs, this may incentivize the Fed to follow through with rate cuts, but could also arguably be an early indicator of further economic weakness ahead.
Yeah, so speaking of what comes ahead, what do you see for an outlook for 2024?
We wouldn't be surprised to see some consolidation and volatility shorter term. So we plan to find opportunities to simply rebalance strategies and take advantage of possibly greater dispersion and more frequent rotations in market leadership. Additionally, more value-oriented quality stocks could do well in the new year.
And what about the fixed income side?
Now that interest rates have normalized over the last few years, we believe that bonds should act as a ballast for protecting against potential volatility and adding attractive income. Modest rebalancing from equities and adding to the bond side of your portfolio can add stability. Fixed income may also perform well if the Federal Reserve does in fact cut interest rates later in 24, as many now anticipate. So
Chad, a lot of great information. Thanks for joining us. As we look ahead, the future may be bright, but it isn't here yet. There may be more short-term challenges ahead. So we're here to help you find opportunities among the challenges and also help you take advantage of what lies ahead. So if you'd like to meet with an advisor to discuss what's ahead for your portfolio, give us a call. Here's Fox News Sunday.